Hi everyone, welcome to another honeystocks.com weekend analysis. This one's going to be going out on the weekend of the 24th of July 2021. Now, what a difference a week makes. Now, before I switch over to my screen share and walk you through a lot of the charts and of course the ideas that I'm sure most of you have tuned in for, I have a bit of an exciting announcement to make at the end of today's video. So if you are somebody that appreciates my work, I've received thousands of emails and messages over the years asking me to do this. So I think it's certainly an exciting moment, and it's no doubt going to be a challenging one. But as someone who has just taken on his first employee, I now have the structure in place to be able to do it. So I hope you get something from that. But first and foremost, of course, the charts that you all tune in for. Let's walk through it. The market has rebounded spectacularly as the week has gone on. I hope everybody's done very well out there. It's been an incredible week. Long may it continue. But let's dive into the charts. Let's see what the market's telling us, and let's hope we can have another good week. Now, before I get into this, I think most of you know this already, but please do pause the video. Make sure you're comfortable with that. There's not any investment advice, and don't be silly. Please do your own due diligence to every single chart that I'm about to walk through. Maybe to give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm very widely known for, and hopefully you get some value from this. And if you do, subscribe to the channel, give the video a thumbs up as well. It would be much appreciated. So where to start? I think where I like to normally take things is spend 5 minutes walking you through the broader market, and then as always I have around 20 individual names that I think you can add to your watch list for the forthcoming few weeks. As we can see, absolute monster week for the home builders. Semiconductors had a massive week. I think it's very difficult to miss this week, to be perfectly honest. There was a massive rebound in the market with the S&P 500. This has been my chart since forever. My upside objective in the S&P 500 was met. Given what history has told us with the S&P 500, that these Fibonacci levels can hold a little bit of merit, the market can chop sideways for a little bit. We are at this level currently. What happens here? We could absolutely break out immediately. Stranger things have happened. It would be very bullish in my view, and it also becomes very easy from a risk management perspective if we break above these levels, because then the downside risk essentially becomes the failed breakout. As we can see with the market crash that we had, obviously 2020, we broke back below these Fibonacci levels, and then boom, obviously the crash fully took hold. But as it stands at the moment, we've got the S&P 500 breaking out to new all-time highs. I think the big question, I think for those of you that maybe don't have the understanding of technical analysis, we can see that the 50-period simple moving average is a key level, not just for the major averages, but individual stocks, etc. as well. When it became clear on Monday that the 50-day simple moving average was acting as some kind of support level for the stock, that's the signal to say, do you know what, let's tentatively start buying the market, and it essentially becomes a buy the dip. And of course, I think a lot of us, especially in my technical world, were concerned that if we broke below the 50-day, that would be a big problem and obviously a bigger headache. But ultimately, buy the dip has worked out again, and I hope everybody's done well this week. It's been a monster week. Long may it continue. We've got the Dow very close to breaking out to new all-time highs, and of course technology. For this one, we can see the 20-period simple moving average has acted as support in the past, and that looks to have been the case again, and we're now closing at all-time highs. And the good thing for me is that the market isn't even massively overbought here. Yes, you can always expect a little bit of chop on 1 or 2 days here and there, but ultimately the trend is higher. It does look a little bit extended above its 20-day simple moving average, but again, that's perfectly normal. Tech going out at all-time highs is nice. We've got the small caps. Again, my chart on this one has changed slightly. I am viewing the Russell 2000 as being in a sideways range. What happens with ranges? Well, they tend to go from the bottom to the top. Ultimately, it's a lot of chop for small caps, but certainly buying small caps at the lower end of the range, when you've got the major averages hitting the bottom end of a range, it means you can go and have a look at the individual names that you like, and if small caps as a basket are going to rebound, then you can drill it down to the individual names. I like the ETFs because I think with small caps there obviously has to be a lot of risk tolerance attached to that, because the names can fluctuate 7, 8, 9, 10% a day, and for many of us it's not the stress can perhaps be a little bit too much. So the ETFs are a pretty valid way to play it. A lot of debate at the moment, growth versus value. Well, the chart tells me that growth is the place to be now. We've retested, this is the ratio between growth and value. This is just dividing these two charts. And if we're above this level, it tells me that growth is the area of the market to be. I know there's some of you will be looking at this chart thinking, what the hell is this? But this is what professional analysts do. We compare to see whether growth is outperforming value, and it tells us that if we want to find outperformance in the market, then this is the area to focus on. And for me at the moment, it's not open for debate anymore. Of course, there was a 6-month period where value was outperforming growth, but as we can see over the last few months, growth has again started to outperform, and that's something that you would fully expect. Now, areas of focus and individual names, I think very, very close to a breakout with the IP ETF, and we've had American Express report positive earnings in the last 24 hours. We have Square Inc., which I have the chart for that prepared for this analysis, looking very, very good. So I think if we can get a breakout in the IP ETF, these are some of the names that you might want to go and take a closer look at. We've got SMH, the semiconductors. We've had a pullback recently, pullback 50% retracement of this move, and looking for a breakout in semiconductors. Of course, technology is closing out at all-time highs. Again, room to run with RSI, excellent relative strength. There was obviously a period where some of the tech names have just not been performing. I think Amazon done a whole lot of nothing for around 18 months. For those of you that caught my analysis last month, I highlighted a potential breakout coming. That's what's ultimately happened. And of course, we know with breakouts, technical analysis, kindergarten, retest, we've had a successful retest, so you would expect Amazon to start to move higher from here. Please note that with the individual names that I'm going to be walking through, we have earnings season, and I think with earnings season, I think it makes a lot of sense to have some kind of rule set in place. For me personally, I like to have at least 10% profit in the stock in order to hold through earnings. That just gives me the peace of mind, and I can sleep easier at night knowing that if the stock does gap down, I've got that 10% there. So that's just one of the rules that I like to implement, and it's one that I help many of my clients and members with. But I think with Amazon, I think we've put in a successful retest. Now, if C Limited isn't on your radar, I think it absolutely should be. Now, I've been working off the weekly chart for this one for the last 6 weeks. We've had a monster week with C Limited. It has closed above its breakout level with a lot of conviction. Many of our clients and members are already in this one, and I think you should add it to your watch list for next week. I think it's a bit of a no-brainer at this point. Many smart analysts, individuals that I know, see this one going much higher, as do I. So I think provided C Limited is above 280, I think you want to own it. I think we've got big breakout in DocuSign. Now, for disclosure, I own this stock. We have gone above 293, which for me was the breakout level. I did post this chart into social media in real time this week, and it looks to be off and running. So again, we'll see what happens with that one. Now, this is a chart that was actually brought to me by one of my members today, actually, and I like it a lot. It looks to be breaking out from a cup and handle pattern, and for me, it's very easy here. It has broken out above the $100 round number. There's a decent little short interest in it, so it's not massively high risk in my view, and for me, it looks to be breaking out. Now, lots of messages on this one with American Airlines. Now, I think something that I think many analysts struggle with, many traders, I'm sure there's many of you watching this that perhaps don't understand the concept of the failed breakdown. Well, when we have a failed breakdown, some of you might know it as a bear trap. So what essentially happens here is you get a breakdown below key support levels, you get all the short money starting to kind of go in and shorting the stock. But what happens is we oftentimes get these failed breakdowns, and of course when we get those failed breakdowns, that the shorts have to cover, and then obviously the buying action starts to move in. And yeah, so I think above $20, I think you've got to own American Airlines. I shared this one with our clients and members on Tuesday, and it's off and running. We've got a monster breakout in Facebook. We have earnings coming up on Wednesday with Facebook. For me, these Fibonacci levels make a lot of sense. It does look like it's gapping and potentially going. It's probably caught a bid, I think, on the back of Twitter, and of course the social media names have taken a bit of a move today. So yeah, I think above 362, I think you want to own Facebook. It's a no-brainer, and of course when you look at these numbers, there's a decent upside objective to aim for. I think Deere and Company is making a lot of sense. I think Kathy Wood over at ARC likes it very much. I think we're potentially building the right hand side of a base. What we tend to find, and this will not break the internet, but good stocks tend to go up in price, and I think with Deere Company, I firmly put this in the good company category, and I think there's a 12% upside. If we're above 360, I think there's 12% upside. Very low short interest, tells me that it's a good stock to own, and yeah, I think above 360, 12.5% upside. Now, this chart or this post I put out to social media during the week with DR Horton got a lot of attention. Now, I think what I want to say with DR Horton is I have a couple of concepts when it comes to earnings season. I have touched on the earnings protection, having that 10% profit in place. Something else that I absolutely look for, especially on names that I like, is what I call the earnings discount. Now, what the earnings discount essentially is got a good company reporting blowout earnings, and I'm sure many of you have been affected by it. Wall Street finds a way to take the stock down pre-market, after hours, whenever it is. But what you tend to find is that if the earnings are really, really good, which I'm sure if you have a look at DR Horton there, the headline probably says it all, you can reasonably expect that dip is going to get bought up. Now, when you combine that with technical analysis and of course remaining bullish, these are the Fibonacci levels. Again, I don't make up the rules, but it tells me that we can buy it provided the price doesn't undercut $85. Now, I posted this into social media in real time before the market opened, saying I think you should consider this. What's happened, it's pulled back to 86, and as we can see, Friday it's up at 93. So I think DR Horton, I think there's a big upside objective there to aim for. It has to get through $100, of course, but I think that there's every chance that, provided the market doesn't throw any massive tantrums, I think you've got to like it above above 85, and I think there's a target of 121. Carrier Global, for disclosure, I provided this chart to our members on Tuesday. It has broken out above $50, and it does look like it's starting to kind of break out here. There is room to run with RSI and good relative strength as well. I initially covered this one on the breakout from this 3-month consolidation, and it has been trading above its 50-period simple moving average ever since, and it's a good solid looking uptrend. It probably will pull back and retest that $50 level, but I think provided it's above the $50 and indeed above the 50-day simple moving average, I think it's probably a dip that you could probably buy. We have Apple. I think we've had a breakout. It has been oscillating and pulled back to approximately its 20-day simple moving average. I think most of us probably own Apple in some capacity, so for disclosure, I own a significant chunk of Apple, and the path of least resistance is most definitely higher. I don't see the point in shorting stocks when they're at all-time highs. I think it's a fool's game, and certainly I'm not going to be shorting the biggest company on the planet. I think Apple is starting to move. It's breaking out to new all-time highs. I think it's a stock that's an absolute no-brainer to own. We have Crowdstrike. I think we've held the breakout level dating back to February. Of course, we have these little mini levels that it has to get over. I think there's a pivot that's been created here. So we're just looking for a breakout here above 270, and I think Crowdstrike probably starts to take the next leg higher. I think with Carvana, I shared this one in our members' halftime during the week. Of course, there's a high short interest in this one, so for me, high short interest does equal higher risk, absolutely. But again, using these Fibonacci levels, I think if we're above 328, which we're already up at 338, I think $500 is a decent target to aim for. Given the short interest, if there's a short squeeze, then that one could get very interesting very quickly. The downside is, of course, owning the stock, it would be perceived higher risk. So you're at that risk for, a big gap down overnight on, some fundamental news, whatever, choose your headline. But I think CVNA, if it's above 328, I think there's a case to be made. And maybe the other, thing to say is you don't need to buy the stock. You could maybe take a small options position, buy yourself a bit of time and make sure your risk is defined. I think that's the good thing about options. You can define the risk where it's appropriate. The thing to say is I'm not an accomplished options trader in any way, shape or form. Many of my clients and members, of course, use options and use my charting to express their opinion in the market. But I think for me, above 328 still makes a lot of sense. I think we've got Viva Systems above 327. The software names have obviously caught a bit of a bid this week. For me, this is a textbook base breakout above 327. Again, gotta like it. I've already covered DocuSign. I wonder why that's in again. We have Google approaching our upside objective here, very, very close. Again, for those of you that have been following me over the last couple of years, this has been the target for quite some time. Of course, breakout way back in January, consolidation, breakout, consolidation. And of course, this is just what good stocks do. Like I said before, they tend to go up. Home Depot looks like it's building the right hand side of a base. So I think above 345, I think makes a lot of sense. I'd be very, very surprised at this point if Home Depot doesn't go and test its previous all-time high. Moderna, now again, this chart, I sent out a chart to social media during the week just highlighting that I think, you know, given RSI is historically in the same level where we've seen sell-offs in the past, you can get a sell-off. It's reasonable to expect it again. Now, I added the caveat that Moderna can absolutely keep ripping higher. I see this stock going much higher, but in the short term, we could expect a bit of a decline. Now, ultimately, that's what we got. I think that, you know, when I sent the chart out to social media, I think that the stock declined something like 13-14% or something. Now, this is quite a nasty candle. And then, of course, it's continued to rip higher. This is what happens with parabolic moves. Technical analysis quite often just goes out the window, and there's no reason to it. We've seen it in the past with Tesla, and I think we could be seeing the same thing with Moderna. The key when you have these parabolic moves is just to stay on the ride for as long as possible. Start to put inch your stop losses up, you know, below, you know, the key levels. I think, you know, for many of our clients and members who have got in on this breakout here, I think the message that I've had to them is, you know, apply some kind of trailing stop, you know, figure out the level that you're happy with, because there will be a time where the stock will rapidly decline and the trend will be over. But, you know, pick a level that, you know, that you're happy with as a profit, and just be happy with it. If the stock declines, it declines. There's nothing you can do about that. But the key is that if you're in it, you know, for the parabolic move, you have to be comfortable knowing that the price is going to decline. We've got Match approaching our first target here at 175. I think if we're above 175, I think there's every chance that we go to 230. Nvidia. Now, I wanted to put out this chart because this is an adjusted chart with the stock split. I had quite a few messages on this one this week, not just from our clients and members, but emails and social media and so forth. Makes no difference to me that the stock split. It's pulled back to roughly its 50-day simple moving average. I generally view pullbacks, you know, on good stocks to that level to be a dip worth buying. And of course, it's a dip I've bought. I own Nvidia, but certainly I'd be very surprised if we don't go and test its previous all-time highs. Roku has had a monster day today. It looks like it's building a base. It did retrace 50% of this entire move. And it looks like it's shaping up for a bit of a breakout there. So I think above 486, I'd be very, very surprised if it doesn't go and just blast through and start to take a big leg higher. Bit of a somber note with Boston Beer Company, but for those of you that maybe like to buy dips, what I've done here is applied the Fibonacci retracement tool. Now, there are warning signals when you have stocks that are declining. When you start to see key levels acting as resistance, that's quite often the catalyst to say that, you know, there's somebody out there that doesn't like this stock. That's what's happened. It's obviously gapped down. Somebody always knows something. I think that's something else to say. It has pulled back to 60. This is a 61.8% retracement of this massive advance here from March. That should say March 2020. Below 690, I think there's a bigger problem. But I think, you know, if you're somebody out there that's holding Boston beer, I think that this would be an area that I would want to maybe think about revisiting my bullish thesis. But of course, you know, everybody do your own due diligence. Monster breakout in Starbucks this week is a bit overextended at the moment, just from where it's come from. It's not overextended with RSI, I think momentum, but I think a pullback would be pretty reasonable. And I think, you know, given Starbucks is a great company, like I said before, good companies tend to go up in stock price, and I think a pullback ultimately can be bought up. We've got Square Inc. I own Square Inc. This is a stock that was provided to our clients and members when it was at the lower end of this range, and it's approaching our target now. These are trend lines that I've built in. I have no idea which one will ultimately be valid. The other thing to say is I would very much like it if Square just breaks through these levels, because if it does break through above, say, the 285 level, I will be looking to increase my position size in Square Inc. again. This is one of these names that I would expect to go much higher. T-Mobile, using Fibonacci, I like it very much above 150. I think earnings will probably be a catalyst here for one direction or the other. This is an alert that's been sent out that isn't actionable yet for our clients and members, but we have an alert for it above 150. Congrats everybody that owns Trade Desk. Very close, I think, to breaking out. It did break out above its 200-day simple moving average this week. This was in our halftime analysis on Tuesday, and yeah, it's moving very well. I think above 82, and I think it starts to take the next leg higher. Again, no, there's room to run with RSI, and we have rising relative strength. We have Vail consolidation above $23. We're currently at just under 22 at the moment, so there is, I think, 5% for it still to move. But given the history that we can see that the stock has given us, when it consolidates and breaks out, the moves can be quite good. So I think above $23, a little bit of patience is required. I don't like buying stocks when they're in here, when they're chopping about. You know, when they are chopping about, the only way that I would like to play it is at the bottom of the range to the top of the range, because it quite often offers a very good risk to reward proposition. We've got Waste Management above 145. As we can see, when this thing breaks out, it can really move. I don't mind stocks at all-time highs. I know there's many of you out there that will be thinking, you know, what the hell? When stocks trend, they just tend to keep going. I don't make up the rules. And we also have Zscaler. Again, looks like it's breaking out from a 6-month base. And again, another disclosure, I already own the stock, and hope that it goes much higher. So I said at the start that I had a bit of an announcement to make. I think there's a few of you that will be wondering what's going on. But I think the first thing to say is, if you have had value from that analysis, please do give it a like, give it a thumbs up. Let me know what stocks are on your radar. Subscribe to the channel, and keep in touch. I think yeah, sorry, let me just bring this up. So yeah, so announcement. So over the last 3 years, I've had what feels like 1 million requests to provide a short-term membership, and that's ultimately what I'm doing. For those of you that have followed my work, you'll know that over the last 3 years I've only been providing annual memberships, and the annual membership has taken off and it's taken a life of its own, and I've built an incredible community over the last few years full of incredible investors, traders, options. It's been an incredible place, and you know I can't put it into words just how accomplished the group is. Now, that said, because of the number of requests that I've had over the years, I've made a decision in the last month or so that I'm going to open up my work to a shorter term membership. Now, the thing to say about the short term membership is I'm only going to be allocating limited numbers to it, because I don't know what the additional workload is going to look like. I did mention at the start that I've taken somebody on to help me with the admin side of things, and this is really the reason for that. It's because I want to see how things look with the monthly memberships, with the quarterly memberships. So for those of you that have been, I guess, desperate to join my membership but haven't been willing to pay the premium membership because you don't know what it looks like, you now have shorter term options. You have a monthly membership and you've got a quarterly membership now as well. Now I would expect the 20 membership spots to get taken very, very quickly. The plan is to test the water with the 20 spots. I want to see how many chart requests I'm getting. I want to see what the chat feed looks like, the type of, I guess, the client or the member, see what it looks like, because I think that the one thing that I'm very, very conscious of is that I do not want to build a community or a monthly membership community that's just full of minute time frame day traders. I couldn't think of anything worse. I think most of you understand that I don't do this for the money. That's why I've been resisting the monthly membership until now. So I'm going to test the water, see the type of individuals that it attracts. Hopefully, if you're watching, you're the right type of individual. Hopefully you're somebody that has a mid-term time horizon. Hopefully you're somebody that likes clean technical analysis, and so we'll see how this one goes, but this is your opportunity. And what we're doing is everything's included. You have your premium weekend analysis similar to what you've just watched. You have trade ideas, which I'll show you what that looks like in just a second. And we have our halftime analysis. We have a community. We've got charting support from myself, and even with the monthly membership, I'm also going to be including the technical analysis program. Everything's included, and I guess it's up to you to go and do your own due diligence and figure out if what I provide is a good fit. But to show you what a trade idea looks like, I touched on, I think, Square during the analysis there. This was the initial alert that went out, and of course it's doing very, very well. Cloudflare, this is still paying our members very, very well, even those that trade options and so forth. Highlighted the breakout at 85. I think we're up at 116, 117 today in the last 6 weeks. Antero Resources, 50% plus move there. Massive move in Yeti, I think it was 20-30%. Plug Power was something like 300%, 400%. My work is beyond reproach at this point. You can go and have a look at our website. I log every single trade idea that I have ever put out to our members over the last 3 years. Naturally, that gets my work a lot of attention, not just on social media, but in the professional side of things as well. And feel free to go and check to see if the types of names that I put out there are the types of names that you like to buy. I'm not putting out penny stocks. I'm not calling out momentum trades on $3, $4, $5 stocks. It's generally quality names at levels that I think make a lot of sense technically. So go and check that out. what my clients say, that these are messages that I've had this week. So this is performance from one of our members since he joined Honey Stocks in January 2020. The purple line has his performance against the S&P 500. That probably speaks for itself. Again, another message today, trading portfolio is up big. I now have extreme anxiety. So yeah, go and check it out. There's Vince. He's 2 years in a row. He's been over 100%. Again, this is one of Vince's plays, breakout, and this was a chart that I provided everybody when it broke out here. And of course, my process keeps you in the trend for as long as possible. Fun ride in that for several months, 180%. Yeah, one of our members went from 100,000 to 160k. So again, feel free to go and check that out. But I think if you are somebody that's looking to get away from day trading, if you want to learn technical analysis, if you're too busy to filter through many stocks, you want to be part of a successful community, go and check out our website and see if it's a good fit for you. But if you stuck around to the end, thank you very, very much for watching, and good luck with the markets for the month of August. Thanks as always.